Welcome to another episode of Compa Financial Therapy. I am Danny. I'm here with my compadre Mike.
Your compadres with financial stories.
Hey Mike, so how was your week?
It's good, Danny. This heat wave is just getting out of control.
I was a little cooler this week, I think.
This week it was. I remember last Thursday was Thursday, Friday, Saturday, humid as heck.
Yeah.
Humid, being musty, stinky,
I don't know.
apestoso.
Well, es que no te bañas, man.
Well, I was not talking about you.
That's a different story.
I was talking about you, not me.
But let's talk about, what are we going to talk about today?
Today we're going to talk about different types of life insurances. Which one would be good?
Last time you were asking about life insurance, right? And, well, there's three basic type of life insurance that are most common. You got your whole life, your term, and your group.
Right.
There's a couple other ones out there, but those are the ones you probably hear the most people talk about.
Definitely.
The group, that's usually like in your employer. Some employers have life insurance and the cost is very minimum.
Right.
You know, I recommend it because it's usually some employers have a budget for insurance for all the different drawdowns, and usually life insurance is like $2 a month, $3 a month. It's very minimum.
I remember seeing that it was like $3, something like $3.28 or whatever.
For 3 times your salary or 1 time of your salary. So it depends on what you get. I usually get the max if it's offered. So that's the simplest one. And if it's available to you through your employers, take advantage of it.
And I know sometimes the banks offer that too, right? Sometimes there's been a few times where I've gotten some inquiries from the banks, credit unions saying, hey, we're going to offer you insurance X amount of dollars.
Yeah, I seen those. I'm not too sure what the cost of those are, but if you got to run the numbers, if the numbers look good, if it's minimum, yeah, why not? Now, whole life and term, those are the two most common, and there's a big difference between the two. The term insurance, they're really cheap, but they end at the end of a specific term.
Right.
20 years, 30 years, 40 years, depending on what you purchase.
What you pick, right? And you're the one that has to pick if it's a 10 year, 5 years, 30, lo que sea.
That's the term. At the end of the term, it's done. Se acabó.
Right.
Now, there are some companies where they give you a return of premium. So all the premiums that you paid throughout the number of years, it gets returned to you. That's the one I kind of recommend. That's the one I see. You get your bang for your buck. If you die, you get the life insurance money. If you don't die at the end of the term, you get your money back.
Is that for either or for the whole life?
No, that's just for the term. That's just a term.
Gotcha.
Now, whole life, that one, it's a lot more expensive, but after so many years, it earned enough interest that it starts paying the premiums for you.
Right.
And they have cash value. Is it worth it? I don't know. Usually people with a lot more money, a big estate, they usually buy the whole life because they're very expensive. Now, what is the life insurance in the barrio?
No life insurance.
Yes, there is, man.
Which one?
Car washes.
Car washes.
And
the fundraisers.
Fundraisers.
La
comida, and that's typically the life insurance where we came from.
Right.
You know, I never really heard of life insurance until, I don't know. Now there's organizations that are in the churches that would offer life insurance to the church members.
I didn't know that.
You didn't know that?
I haven't seen that around.
There's an organization named Knights of Columbus, and they're typically in
the churches.
The churches, and they offer life insurance. That's pretty much what their business is for. Is life insurance to their members, and they have both the term and whole life and a couple other types of life insurance.
Right. The one that I have, and just to put it out there, I have whole life insurance. Not that I'm rich or have a big estate like you said, but it's the one that they sold us on at the time. This was back in 2005.
Why did you get life insurance though? What made you get life insurance?
Okay, so I've carried life insurance since I was about 18, right? When I went into the service, they offered us the service group life insurance or whatever it's called. And when I got out, I was like, dude, I need to carry some kind. You can carry it over, right? You can pay the premiums, whatever it was, like $20 a month, whatever it was. But I think I took too long to respond to it. It expired, and then I think I was able to go back into it, but I never did it. So I just jumped into my the company that I have my car insurance with, and they told us you can get this one or this one. I went with the one that was offering a 4% return, which is a whole life. But the reason I got it was to protect my family in case I pass, in case I die. They have money, right? My wife doesn't have to work. My kids don't have to worry about the finances. They don't have to worry about a funeral, right? Paying for a funeral, fundraising.
Funerals
doing
are
a car wash.
expensive. And there's that other life insurance that you see on TV a lot, like funeral expenses at the end of life. Those are a little expensive. If you could save up the money for the funeral, it's probably cheaper.
Right.
But if you can't, then maybe that's the other one way to go about it. But, how did you determine the amount to get?
So I carried over the amount that I had in the service, and I think they automatically throw in X amount. So when I got out, I requested the same amount, just because that's what I was used to, right? And then along the years, they would send me offers saying, "Hey, for an extra $5 a month, we'll increase it by $5,000 or $10,000." Like, yeah, go for it. And then a couple of years later, again, I'd get another notification, and they're like, "For another $5, we'll bring it up another $5,000 or $10,000." So the funny part is, my wife never got those. So she kept hers at whatever it is, and then mine's like whatever it's at. So she's obviously going to get more money than I am.
Well, typically, the head of household should be the one that gets larger insurance.
Right.
Because of, especially if you have a mortgage and vehicles and these big expenses that your income is really required to sustain the household, then you should get enough insurance to cover those big ticket items.
Right. And even at the time, we didn't have mortgage. We didn't have a mortgage, so I was like, "Oh, all right."
So yeah, at that point, personally, I think if you don't have kids, you don't have a mortgage, and maybe if you have a car,
Right.
just get enough to cover the car. You don't want to leave your brother, sister, parents, or wife with the burden of a car loan.
Right.
That's when you really need life insurance.
Right.
But once you have a family, then yeah, you're right. You should start thinking about, if you die, how are they going to survive? But personally, I don't think you should give a lot that Sancho's going to get.
Right.
Live more comfortable than you, right?
I don't know. So I'm gonna say I don't know on that part. Here's why. And maybe I'm thinking about it the wrong way, and it may suck the way that I'm thinking about it. But if I were to die, I have a good amount of life insurance for my kids, my wife. If I were to die, the way that I'm seeing it, I'm the investment, right? So if I were to die, they're gonna cash out on and that'll help them get a head start, right? Versus just covering the expenses in the mortgage, they're gonna be able to cover the expenses, the mortgage, the funeral. They're gonna be good. They're gonna be well off. And for me, and I think also you got to talk to your family about their life insurance. I've known some family members that don't even tell their family members that they have life insurance. Yeah.
Oh yeah, you definitely have to let it's another topic. We should talk about living trust and wills. That should be in your estate,
right?
Especially if you own property, especially if you have kids. You should have some type of living trust or will.
Right.
But as far as the amount, at minimum, you should have enough. In my opinion, you have a house, pay off the house,
right.
Pay off the car, and hopefully, if you are following our recommendation, have income property and pay off one or two income properties.
Right.
At which point, the way I see it, I have enough life insurance that I'll pay off my house, pay off the apartments, and so if I die, my wife and my family could live off just the income of that.
And not have to worry about the stresses of all that stuff.
No.
Good.
That's the way I picture it. Now, I'm not going to make my wife a multi-millionaire just with life insurance. I'd rather give her wealth through other means rather than life insurance. Life insurance should just be a protection in case you don't make that wealth in time that you pass away.
Right. And for me, the way that I see it is giving everybody in my immediate family, a head start, right? Since I'm the first one in my family and generations also to start investing in a 401k, in the stock market and stuff like that. For them, I want to give them a head start before I die also, but once I die, then I'll have a better head start.
Well, I think you should also not only talk about life insurance, but you should also talk about what you expect them to do with it.
Right. And I agree.
Because I've had family members who the husband has passed away, then there's the wife gets a life insurance, and basically after so many years it's gone.
Yeah.
And so I've left instructions as far as this is what I think you should do in case I pass away.
Right.
Pay this out, and you should have enough income to last you the rest of your life.
Right. And I agree, and that's why I think one of the other podcasts that I had talked about earlier also, I was talking about early intervention, early education, right? Educating your family. That's something that I do with my kids. Les enseño so they can, when they get older and they have money, they know how to manage it.
That's good, because I never had that conversation with my family about money, and in our culture we don't talk about. Right. We said this a couple of times. We don't talk about money, death.
Yeah.
The only time you talk about death is like, hey, you know, somebody died, let's go make a collect money, and or let's sell food, we need to pay for the funeral. Right. And funerals are expensive.
Yeah.
You know, average funeral right now is about $30,000.
And is that like paying for it beforehand, before the person dies, or after? Because there's two different prices. I have a cousin that works for, I'm not sure if he still does, but he was selling those, right? The plots and the graveyards, whatever. And he said, hey, you want to buy before you die because it's cheaper once you die.
It's usually typically more expensive, but right now, because of the amount of people who are dying because of COVID,
right,
it's expensive.
Supply and demand. No?
Supply and demand. And a lot of these these cemeteries, they're getting filled up.
Yeah.
So that's going to be a whole different topic of what's going to happen in the future if you haven't got your plot yet.
Right.
But yeah, you're looking at least $20,000 to $30,000 for a funeral.
That's pricey.
If you're doing like cremation, I think that it's running about maybe $1,000 to $2,000.
A couple $1,000, yeah. And that's on the lower end.
Yeah.
On the lower end, because I know I've looked at some funeral societies.
Yeah.
Yeah, and if you're a member of them, I think paying $50 a year, it's cheaper.
Yeah. I mean, that's an option. Or you don't care, you could put you in a mass grave and a mass cremation, and right. I think those run really cheap. Those are sponsored by the government because they got to do something with you.
They really have those?
I think so.
Oh shit.
Yeah, like if you're poor and they can't afford. I know the Catholic cemeteries. They'll find a place for you, but it's going to be like a mass grave. And I think the coroner's office, if you don't have any family, they'll cremate you.
Right.
But it's going to be in a mass cremation.
Andale.
I think.
I didn't hear about that. I didn't know about that. I thought you were joking about it.
No. Yeah. Imagine if you die and there's nobody that cares about you or wants you.
Right.
What is the government going to do? They can't just leave you on the street, so they got to do something about it.
That's true.
So there's got to be some type of program for those.
That's interesting, because I have heard people saying like, oh, they didn't claim the body or whatever, like, but I never found out like what happens after the fact.
Yeah. Well, I know in my line of industry, there was a developer that was trying to develop a cemetery, and I got to tour a land before it became a cemetery. So they were doing a cemetery permit, and when we went to the job site, they had 4. In every corner of the property, they had like a monument, and they caught my eye, and I asked the project manager, "Hey, what are these monuments in every areas in the right. property, typically in the corners?" He goes, "Oh, when we first buy the property, they put these monuments and they bury somebody in each corner. So now, technically, the whole property is a cemetery." And they just fill everything in between.
What the heck?
So once you declare an area a cemetery, they can't take it for any other purpose.
Damn.
So that was really interesting. Like, oh, yeah.
Some of the stuff you learn from working in certain things, you know,
yeah.
certain areas. That's interesting.
Yeah.
Really interesting.
So life insurance. Now that I'm older, and I do think it's necessary, but for certain families.
Right.
But what do you do for the raza who are barely making ends meet?
Right.
You know, they're not planning about, and that's typically what happens. They don't plan like, well, I got to put $100. I could barely need $100 to feed somebody. Right. So what are these people supposed to do? And that was typical where I grew up.
Right. And I think it still happens, todavía, right?
Oh yeah. And we'll do a fundraiser. We'll go out and collect money in the streets. I'm not saying anything that's bad, but is there something they could do where they're not strapped and they don't have to go to those resources?
Because when I was thinking about it too, during those times, I don't know how much how much money they're actually fundraising, right? To be able, if you're talking about like somebody who has $0 and then van pa fuera to fundraise, venden comida, I don't think they're gonna be able to make up those $30,000. I know they also have other means, like the GoFundMe page.
Well, they do GoFundMe. Well, now it's GoFundMe, but back then there was no such thing as GoFundMe. Yeah. But I know families pitch in. You know,
families pitch in. I've also seen where if somebody already has a plot, I guess they can transfer to somebody else. Kind of like
I've seen that happen where family members they die and they have no insurance,
Right.
no nothing, and a family member, you know what, we already got our plot paid for,
Right.
just use it.
Right.
And I've seen that, but that's not good for the person who planned. Now he has to start all over again.
Right.
So what do you recommend? What are we supposed to do if you don't have that extra?
That extra cash. I know there's and I was mentioning this earlier. But there's around they have funeral societies where if you pay $50 a year, they offer you like a discount. And I think they offer the ones that I've seen in our county. I think they have 8 different areas if you want to be buried or if you want to be cremated, right? And they offer at a discounted rate. I think it's like $1,200, $1,400 to be cremated. If you want a plot, they charge. I don't remember the numbers, but you can get the plot, the space, at a very, very discounted rate. But you got to be a member, $50 a year.
I know when my grandmother passed away, we learned that she had made all her arrangements.
Nice.
And
this was after the fact that you learned about it?
Well, when she passed away, my aunt had said, "Hey, she already has everything paid for." I go, "What do you mean?" She goes, "Yeah, she after her husband passed away, she took on the initiatives to go get the plot, and she made every single arrangement. We had already purchased the plot when my grandfather passed away. It was a double plot,
Right.
so she knew she was going. So she knew all I need to do is make the caskets, the flowers, and she went and picked everything, the type of flowers she wanted. She had everything paid for. She didn't want to leave a burden on anybody. I was like, wow.
And I was gonna say, you got to commend her for that, right?
Yeah.
Like, damn, because she went out there, she did it herself. Escogió las flores, el casket.
I thought that was like, I mean, yeah, well, like, wow. But at the same time, to have the courage, I mean, just to talk to my parents about doing a living trust.
Right.
Was like, no, we don't want to talk about that. And that's the raza. Like,
It's hard.
we don't want to talk about anything about that. To think about my grandma taking that initial step. Like,
It's hard. I remember going to my primary care physician and she said, "Hey, have you filled out an advanced healthcare directive?" I was like, "What the hell is that?" And she explained to me. She gave me the packet and everything. Next visit, she's like, "Hey, did you fill it out?" I said, "Nope." It's like, "Why?" I said, "I ain't trying to talk about death. I ain't trying to fucking think about me dying." And that shit's hard. It's hard.
It's hard, but I think it needs to be done. And
It
just
does.
tell you
It
why.
does.
I've been in the position where I have to make life and death situations
Right.
for multiple family members. I mean, the first time was when my wife, when in my 20s, she had became ill, and I had to make a decision for her. It's not easy.
It's not.
It's not easy. I think mentally, it's like, whoa. I knew I had to make that decision one day,
Right.
but not so.
You weren't
young.
expecting to see.
Yeah,
So far, I haven't had to make that decision yet.
but you will.
Except for a dog, yeah. Except for a dog, we were like, we gotta go. Yeah.
It's even then hard.
And that
for
was
a dog.
hard.
That was hard for a dog.
That was hard.
I mean, I had to do that with several dogs over
Yeah.
the years. After they get old and
See.
they can't walk anymore. Like,
Yeah, this one had bone cancer, and I'm like, oh shit, we gotta make the decision. It was hard.
yeah, those are
hard.
difficult times. So imagine a human,
Yeah.
a
somebody-
human that you live with for years,
Right.
or and sometimes the family members that should be making that decision, they're not in the right mind.
They can't make
And
it.
it says, "Here, you do it, mijo."
I've had that happen. You've had it happen.
And you have to step up to the plate.
Right.
I don't know why I got voted in to plan funerals for my elderly, like my grandparent, both of my grandparents, my uncle. I had to plan their funeral. I was like,
You know what it is sometimes with our people? Los más educados are the ones that have to make that decision.
well, maybe that was the reason behind it. But yeah, I was like, okay, just. Right. I mean, I didn't mind, and I took the plate and vámonos. Okay, what kind of service do you want? What do you want? Just went ahead and did it.
Yeah.
But yeah, it's not easy. It's not easy.
I imagine it's not, and I'm like, and I'm still thinking like sometimes I think like, damn, at some point I'm gonna have to make that decision for somebody or some people.
Yeah. So in my position, my wife and I have talked about it. We don't want to leave that burden to our kids.
And so I think that's a very important reason why you should take care of it.
Yeah.
Proper planning, right? Espérame.
Well, it's hard
Right.
in the first place to just plan for it. Now, to get your son and daughter, your dog, to make them plan for you,
Right.
that's not.
It's going to be hard.
Yeah.
So I like the idea of preparing it beforehand. So you're like, vámonos, boom, it's
Yeah.
done. They don't have to worry about anything except just making it,
Go.
make the arrangements, the dates.
I like what my grandma did, and I'm going to try to follow her
Yeah.
steps. Like, everything's taken care of. You don't have to worry about anything. Maybe just even what I wear here. Bury me with this, and I think that's the way to go.
I told my wife to cremate me I'm like, cremating. She's like, why? I said, because you guys nobody's gonna visit me. How often do you hear somebody going to the graveyard and be like, oh, I visit them? Rarely.
Yeah, depends.
Rarely. I spoke to my mom after my grandmother passed away, her mom, and it had been a couple of years. I think over 5 years. She's like, I've never gone to visit your grandmother's graveyard.
Yeah, I mean, some people don't feel comfortable going to a graveyard. I don't know. I thought about cremation, but what if because they don't clean that what is it, the oven? They don't clean it, so you're going to be in a box with ashes with somebody else. Like,
that's true. Well,
that's the only thing.
Somebody with you.
Take somebody with me.
Be holding hands, ash hands right there.
When they give you the wrong ashes, how do you know?
That's true.
It's happened.
I know my wife will be able to tell. She's a toxica, so she's like, that's not my husband. I can sniff him out. That ain't him.
That's not him.
He doesn't smell like ass. That's not him. He smells too clean.
She's gonna haunt you into your death, right?
Oh, she will. I know she will. For a fact, I know she will.
I feel sorry for you, dude.
That's why I have life insurance, bro. She's not my beneficiary. I gave it to somebody else. Don't let her know that, though.
Oh, because otherwise she's gonna be the.
She's gonna be partying it up.
Oh yeah, like
how
soon can you leave?
Right. Oh man.
Yeah.
But the other insurance you were talking about was the whole life insurance.
Whole life, correct.
That's the one that I have that collects us the 4% every so often.
It varies from company to company, but yeah.
So the one that we have, and they changed this too. We had one for 4%, and then we ended up getting one for my daughter, right? Just to cover her funeral expenses in case something happens.
That's very morbid, man. Plan for your kid's funeral.
But it's a reality too.
Yeah, but I don't know, man. That one, I'm not too sure if I agree with you on that one.
Why not? What's your rationale? What's your?
Well, you should have money in your account that if something that unfortunate would happen, you should be able to cover your kid's funeral.
So I would have to look something up, or even have like everything taken care of already.
Yeah.
Because in the long run, I don't know. I'd have to do the math to see if it's cheaper.
Right? Yeah. No, but you're right though, because I mean there is the situations where kids die. Right. I mean, it's reality. I had a good friend where they lost their kid, and yeah, they had to pay for the services. Right. But you don't plan for your kid, no, and you don't want that.
You don't. You want to die before your kids pass away, and it happens. But when we got the same type of insurance for my daughter whole life, and they offered her a 2% return. Now we were getting the 4%, she's getting the 2% return.
Why is she getting less?
That's what I think they had changed it after a while, a couple of years. And so when we got it a couple of years back. But instead of having the 4% option now they had the 2% option. So they keep bringing it down.
But I hear about whole life. Most of the people that I've known who've actually purchased whole life, after 10, 20 years, they decide, okay, I don't want to continue paying it. Some they cash out, but they don't really get enough of the money that they put into it back out. And then, so, I don't know. Hopefully you stick to it and then till forever. Otherwise, yeah.
And then I've seen other people, too, that get like a 10, 20, 30, 40-year term. But then what happens after 20 years or 10 years, right? Then you have to renew.
You have to renew. It gets more expensive.
But then that's what I was going to say. Then it gets more expensive, right? Because somebody was telling me they're like in their 60s. They're paying about $500 for term insurance. And I don't know if it's per person or for the couple.
But the idea is that, let's say age 60 or 70, you should be very well off to where your house should be paid off. You shouldn't have any vehicle loans.
Should.
You should not. And so financially, you should already have money set aside for your expenses.
Right.
When my father passed away, he did not have life insurance, and he had it at one time, but then he was like, nah, it's costing me too much, so he sold it and got cashed out. Shoot. But he decided to set the money aside.
Right.
He goes, when I die, nobody's supposed to be worried about it. I want nobody to go collect us. He set the money aside, nice. So it was there. That was the difference.
Did he set it aside like in a bank account, or tenía en la casa in the walls hidden somewhere?
He had it in a bank account.
Okay.
Yeah, he had a bank account, which I'm not sure if that was the wise thing. You should put it like in a mutual fund.
And that's the other topic we're going to talk about, right? The mutual funds, where to put your money. I was looking into that.
Well, actually, somebody reached out to me this week and says, hey, I finally got a full-time job.
Nice.
My employer offers 401k type plan. What should I put my money into?
Right.
And of course, I said definitely do the matching, like we talked about last time.
The minimum matching to get the full match from your employer.
I said the employer gives 4% matching. Right. I said give at least 4.5% to 5%. Right. I recommend the 5. If you could do it, do the 5.
Right.
So that was my recommendation. And second is to diversify.
Right.
Now, this person's very young. I think she's probably in her 30s.
Okay.
So, as you're young, starting out your career,
Right.
you could take risk, and
Right,
you
of
should
course.
take risk. So you should be in a very aggressive plan.
That's what I've heard. Like 20s, 30s, even maybe teenagers. Teenagers up to 30,
Yeah,
30s.
You have a lot of time
Aggressive.
if the money goes south, you have a lot of time to
To
recover.
make up, of course. You
Yeah.
still have, like, let's suppose at 30, bam.
And the market takes a
crap.
dive
You still have, what, another 35 years, digamos?
to recover, and you'll
Yeah,
recover.
for retirement, yeah.
You'll recover. So as you get older, though, and your 40s and 50s, it should be a little bit more
You got to pump the
conservative.
brakes a little bit, huh?
Yeah. As you're getting closer to retirement, 50s to 60s, at that point, it should be like pretty much almost like a savings account.
Right, right.
Because you don't want to take a lot of risk. Maybe a little bit, maybe get half of the funds into where it's a little bit, somewhat to get a little bit of income.
Right.
But you should start thinking of more of a conservative investment.
Right.
It's not going to give you a lot of rate of return, but at least you know in 5 years when you retire, your money's going to be there. You're not going to have to wait until another cycle of the market coming back.
Right. And that's where I started. I started off, I think, 4.5 years ago, where I started investing in a 401k. And I didn't know what the hell I was doing. But I had this coworker who approached me, and she asked me, she's like, hey, Mike. I don't know how the conversation got up there, but she's like, hey, Mike. Her name's Myra. She said, do you invest in a 401k? How much money do you invest? I said, I don't invest in shit. She said, why? I said, because I don't know anything about it. And I thought the same thing as other people think, like, it's fake. They take your money, it's gonna crash, you lose all your money, right? I was uneducated.
You're gambling.
Sí, gambling.
I mean, that's what the Raza says. You're gambling.
Yeah.
Yeah. I'll put it in the horses, mejor.
Santa Anita, huh?
Santa Anita.
And the way she approached me, she told me, she's like, look, Mike, if all you can do is $20, do $20 a paycheck. And I was like,
But in reality, when it's coming in your paycheck, let's say you put $100 into it, right?
Right.
Or $150 a month, but it's pre-taxed.
right.
So reality, your check, because you think, oh, my check's going to be $100
Right. $100 less.
less. Reality, no, it'd probably be like $5 to $20 less, because you're getting it from the girls before they take the government takes its share from
Right.
the deductions.
So that's what I've been telling some people, some of the coworkers people that I work with. I tell them, like, hey, it reduces your tax liability. So instead of this amount, now they're taxing you on this amount because this amount's going into your 401k.
Exactly.
Luckily, I was able to talk to somebody yesterday, kind of just give them a little bit of education about the 401k and government-sponsored 401ks. She went from, I think, from a 4.5, and she bumped it up to 7. And she's like, thank you for telling me. But it's something that we're going to get into a little bit more with her and just kind of give her my experience. And she's like, what do you have it at? I said, I have it at such and such. She's like, holy shit. And I explained to her why. One, tax liability. And then at the end, you're going to have more money. You're just putting aside for your retirement.
But you got to be careful on how much you put in, though.
Right.
Because as it is that they match, but the IRS side,
Right.
there's a cap that
Right.
you could invest a year for your 401k. And sometimes what happens, you put the max what the IRS has,
Right.
then the matching might not be put in there.
Right.
So you got to be careful on that, because I know some agencies where I had a friend who was putting the max, boom, boom, boom. He says, hey, how come I'm not getting the matching anymore? Well, there's no room for the matching. So instead of saying, we're going to put your 4%
Right. On top of yours.
on top of yours, well, you continue putting yours and we're not going to fund it. They don't tell you that.
Right. But I think the other part too is I think that changes every year, right? Kind of changes every couple of years. The maximum you can contribute.
I don't know how the federal government does it, but it's a federal government thing. So
Right.
you could always check on the IRS website what's the max you can contribute per year, and then the way I do it, I get that amount and then deduct at least 5% to make sure I get the matching.
Okay. So I remember these last 2 years, 2020 and 2021. I think the max you can contribute to a 401k is 19,500 on the year, right? Per year.
I'm not sure what this year. I haven't had a chance to look at it in a while.
I think they kept it the same for the 2 years. Before that they had a $19,000. The max you can contribute to your 401k, 457b, lo que sea, right? The Roth IRAs, the Roth IRAs, the max you can contribute is $6,000.
Yep. Per year.
So here's the funny part. You can have 1,000 Roth IRAs. The max you can have in all those 1,000, 6,000 total. Like, come on, man.
Yeah.
So I kind of feel like they really do limit some people, from becoming rich.
Well, but that shouldn't be your mechanism of becoming rich.
True.
You know, we could go on the whole subject as how do you make true wealth? That's that's supposed to be your security blanket for when you retire. It will supplement your income.
Right.
That's what that's really designed for. And the whole concept be doing it pre-tax is that when you get old, you're gonna make peanuts, man.
Yeah, of course.
So the government's going to give you a social security check.
Peanuts
it's going to be
peanuts.
So for you to go homeless, that's why they encourage you to do 401k
Right.
or for whatever the plan is.
Right.
That's why it's set up that way. But if you want to make wealth, there's other ways. You buy stock market.
Right.
You buy stock market. You buy real estate.
Right.
You know, those, or a business, some type of business.
And shoes, right? Some people, I hear a lot of people say that they're investing in shoes like Jordans. You can't tell they
Well, actually, you know,
and then they wear them.
They're actually it's a good investment.
It is if you're selling them. But I've known people that they're like, oh, I'm investing in my shoes, and then they put them on and lo están usando. You know, I guess some people do buy them así used at a lower cost. But for me, that's not too much of an investment.
I mean, because there's baseball cards,
Right.
there's stamps. I was gonna say food stamps, but no, that's not a form of investment. That's what you buy at the hood.
I've
right?
heard people,
You trade the food stamps for something else, right?
That's what I've heard. Hey,
Yeah.
for $5, I'll buy you whatever you want. Look at that, whatever.
And that's how they get their money, right?
Yeah, of course.
Hey, you got to do what you got to do in the hood, right?
Exactly.
But so those are the types of. I mean, you really want to make wealth. It shouldn't be your 401k. Some people do though.
Right.
I've known people that have done that. But I think to make true wealth, you should invest in real estate. You should invest in the stock market. Buy, I don't know about cars though, like luxury cars.
Right. I don't know about that.
Because some of them are collectors.
Right.
They do get, but like a regular Toyota now or regular Mazda.
Nothing mainstream, right?
Yeah,
Something
no.
out of the.
But you're talking about millions of dollars of cars.
Right.
Yeah.
Right. And so the other part that I wanted to discuss is when your friend was asking where exactly should they invest, we can't technically tell people exactly where to invest. The reason being is, and this is, my wife was asking me a while back too, she's like, why doesn't Dave Ramsey tell you exactly where to invest? Like which ticker numbers or which tickers and this and that. Like, for one, it's a liability thing, right? If I tell somebody exactly like invest in this right now and it takes a shit, they're going to come back and sue me, or they can fucking come back and...
You told me, cabron,
Yeah. And it's happened. I've told people sometimes, like, hey, this is what I'm seeing. This is what I've been told. It's up to you. Do your research. I'm doing my research. I haven't looked it up.
No.
Y lo que sea, right?
No, it's true. It's true. You shouldn't tell people
Right.
what to invest. Now, if they ask you, what are you investing in? How are you investing in? That's a whole different story.
Right. And that's what I tell them. I said, I don't know, I can't tell you, but let me tell you where I invest and how I do it. Let me tell you my strategy so you can kind of understand. I don't just want to give you the responses. And
So what is your strategy?
I'm going to have to charge for that. You're talking about food stamps, right?
No.
So my strategy...
And your like when you set up your 401k, what was your strategy? Did you decide, do small caps, large caps, international? What did you do? Did you try to pick a big thing, or did you just get one of those pre-built from the bank that they have and says, okay, I want to go this one, this is aggressive, or I want to go this was moderate? What was your strategy?
So one thing I did was, first, I did invest in the company matching. I think I did 5% to start, and then the company was matching 4%, right? And then I I spoke to you, and you kind of like, because I didn't know anything about it, and then I transferred from that job over to this new job, and I asked you, hey, Danny, explain to me a little bit more, and I'll tell you why I came to you specifically. Somebody in my family, my father-in-law, said, habla con Danny. El Danny sí sabe de investing. Ese sí sabe. You want to know about investing, making money, making wealth? Yeah, habla a Danny.
I don't know that I had that reputation amongst the family.
He said it. My father-in-law. So when he said that, I'm like, all right, cool. So I came to talk to him, like, hey, I didn't know how to do this whole thing, right? And you kind of explained to me a little bit how the 401k works. Diversify, and it's something I have always heard, diversify, like portfolios. I'm like, what the hell is that?
What does that mean?
Right, what does that mean, diversify? I'm like, I don't know. I just heard it in grad school, y lo que sea. But taking your information, your knowledge that you shared with me about the way you showed me where you invest. Es lo que me enseñaste. You opened up your books for me, like, this is where I invest. You took a screenshot, which I was very thankful and grateful that you did that. Because a lot of people, I wasn't expecting you to do that for me.
Yeah.
We talk about raza, we talk about people, eso no se habla. And I wasn't expecting you to open it and show me, like, this is right. And I was like,
I didn't show you the amount I had.
No, that you didn't.
No. But I always feel that there was always a way you could teach somebody
Right.
without disclosing your full pocketbook, you know. And I think that's what we're going to be doing here throughout our videos. We'll
Right.
show you how we've done it,
Right.
but we won't exactly show you what
Right.
our net worth is or wealth is.
Right. And if you do, I charge $50 if you want to know, if you want to see, take a
If you want to
screenshot.
see
$50. No, I'm just kidding. But the other reason why you can't tell people exactly where to invest in is each company, each like Fidelity, Charles Schwab, Robinhood, Vanguard, and other companies, they have different ones, right? They have different places you can invest in, and what Charles Schwab may have, Fidelity may not have. Mm-hmm. So I found this out this week también. I was looking at this stock, this company. They're a penny stock right now, right? We try to buy Charles Schwab, and Charles Schwab doesn't have it. But Fidelity does have it. So it's hard. We can't say specifically for that reason, too.
And because you might not have accounts in all. You might have to set up multiple accounts. And yeah, I agree.
Right.
But diversification, I think it's key.
Right.
And I learned about this industry. You know, at one point, I did go to a financial advisor and get their advice. What I learned from them was a lot of common sense that I already knew, and we were on the right path. You know, when I was telling him what I was doing, he says, "Well, really, what do you need us for?"
Right.
You know, seriously, that had that conversation. He goes, "You're doing the right thing. By the time you get to, 60 or 70, you're going to be well off. You don't need our advice." But I still used them to help buy certain type of mutual funds that I was looking for and so forth. But yeah, I mean that's how I learned about the diversification and stock market and so forth. Because back then, internet was still
we had dial-up. You hear ringing going out right in the background.
So that's how I opened up, and I feel that I paid for that service.
Right. Take advantage
and spread it around. So when you came to me, like, sure, I'll tell you how I did it, and that's how I got my little diversification. I asked them, hey, my employer has this. What should I do? What do you recommend? I saw what they were doing. I go, yeah, that sounds good.
Right.
And it looked pretty well diversified. It was somewhat aggressive, and it's worked out pretty good. I think I probably would have gone a little bit more aggressive now thinking about it.
Right.
But I think it's done quite well.
And so once you told me that you were talking about the ages, 30s, be aggressive, and that's how I have mine right now. Most of them, I have like 8 or 9 different ones, right? Mutual funds that I'm investing in. 2 of them are kind of like very conservative, so I'm going to have to split those up and maybe distribute some of those funds into more aggressive ones. I might keep one. I might keep a little bit of money in those just to kind of pump the brakes, hold it off really good. Right now, the way that I have it invested, based on speaking to you, based on making myself more knowledgeable about the mutual funds, the stock market, how it works, how it's all tied together, I think I have a 31% return from January to now. 31% return on my
really
investment.
Good.
Right?
There's no bank that's going to give you that type of rate of return.
So I was looking at that, and I'm really comparing, like, somebody was talking to me about CDs today. CDs and savings account, checking account, and I looked at it.
The CD gives you, what, 3%?
If that.
That's like a really high CD.
If that.
I think average was, what, 2%?
If that, too.
Really?
The one that I saw was like 0.45%.
Oh, really? They're really low now.
0.001. And those, with the CDs, you have to have your money in there
for a specific period
for
of time.
For a specific amount of time. Some of them are 10 years. I saw one today that was 10 years. I was like, man,
what about the government bonds? You know how you buy those bonds and then, you can't cash them until X number of years?
Until they mature, right.
Those don't even give you that much either. Yeah. I think if you invest, at the very least, in the Fortune 500 companies, which are the 500 largest companies in the United States, you have a good chance of getting at least a 10% rate of return, which is pretty good.
And I have some of those. I have a mid-cap, and I had to look up what the hell mid-cap meant, right?
It's
mid-cap, large
companies.
cap. Say it again?
Mid-sized companies, right?
So there's small cap, mid-cap, and large cap, right?
And what are they?
So I think what cap stands for, if I'm not mistaken, capitalization. How much money they're making, right? So your large cap makes up to, I think there are companies that make about $10 billion. $10 billion with the B.
That's their annual revenue, or what is that?
How much money they're bringing in.
Okay.
Which is their capital, all their capital, $10 billion with the B. Then you have your small cap, which is I think from 300 million to about $2 billion. And then the mid cap is what covers in between the large cap and the mid cap, right? So I had, one of my strategies was, and I told you this, with the OCD, I get obsessed with stuff. So I have to learn everything about it. And it's good.
Which is good, because now you're able to pass this information on and they don't have to do all the research.
Right.
You did the research for everybody and for me too, because I probably learned something from you too.
So I break it down, right? I break it down when I tell people like, hey, this is what mid cap, large cap, small cap, and this is. So I obsessed, right? And I went through the website that the company offers, and I'm reading every single thing, like mid cap, large cap, mid cap. What is a mutual fund to begin with, right?
Well, mutual fund is basically it's a stock,
right?
Or it's one stock that compiles different types of stocks
Right.
into one large stock.
Right, taking a bunch of other people's money, your money, my money, anybody's money that wants to invest in it. So they pull the funds.
Well, that's how you the mutual fund is there's like, if you want to do like a tech mutual fund. So that mutual fund is going to buy nothing but tech companies.
Right.
And so the one company that's making the mutual fund says, okay, we're going to buy Apple, Google, Facebook, all the tech companies, and we're going to charge X amount for this fund, and you buy into it, that's what you're going to be buying. That's what a mutual fund is.
Right.
So everybody who wants to buy that type of mutual fund, they're going to go get it, and it's a tech mutual fund.
Right.
Now, there's different mutual funds that have from, pharmaceuticals all the way to
different sectors that they invest the money in.
Yeah.
So that's what I had to figure out too. Like, and they have these pamphlets, right, where it says like this type of mutual fund, different sectors. They have the healthcare, communications, electronics, even food companies like Little Caesars, Domino's. I was like, what the hell is all this?
Yeah.
So I looked into what each one was: large cap, mid cap, small cap, where they invested, what type of person should be investing in this, how much aggression is it, right? How much risk is it? And I did all that work. And then what I did is they also had the company that I use, they have the flyers on there, right? And it tells you what percentage each one is at, each mutual fund. Is it a retirement targeted fund? Is it a large cap, mid cap, small cap, non-US equity, and some other ones, I forgot the other ones. But I went in there and I started seeing and comparing each one. Okay, year to date, what percentage is each one? And then I find the one that has the highest, right? Okay. In the 1 year, what are they doing now? So instead of year to date, now it's 1 year. How are they doing? Okay, and then I look for the one that has the highest percentage, because the highest percentage is the one that's making more money, more return.
over the year.
And then I look at the 3 year mark. How are they doing 3 years? And then 5 years. And then they have a section that's called Inception. And then I look at that one, kind of the hardest, because that one should be telling you how they're doing, performing.
From the day one.
From day one, right when they started it, or investing in it, up until now.
So that's the way you picked your mutual funds?
That's the way that I picked my mutual funds.
Yeah. That's pretty good strategy. I didn't think about that one, but yeah, it's pretty good strategy.
And that company, the one that I use, they update that document every 3 months. So this one just came out June 30th.
So how often do we should be looking at your 401k, your readjust, because you have to readjust it every so often. So how often? One of the rules that I use is when I get a raise, a cost of living raise or promotion,
right.
I definitely look at it then, because typically I'll try to put the whole raise, if I can,
right,
or the cost of living increase into that. Increase my my contribution. But if I'm already maxed out, then can't do that. But I still, that's a good time to relook at how your diversification is.
Definitely.
So what do you recommend?
What I recommend is different than what I do. So what I do, I'm talking about like being obsessed. I check it every so often. I think I check every week, sometimes daily, to see how's it performing.
But you're changing it every week?
No, I'm not changing it. I'm just checking to see how it's performing.
That can drive you nuts, no? Psychologically, it can mess you up.
It makes me feel good. It gives me a sense of security.
But have you been to a phase where, because it will happen, you start seeing that sucker go down?
I've seen it go down.
And
I'm glad you brought it up.
You start panicking.
I did not panic.
See, that's the thing, because if you get people to start looking at it, and you see, okay, I'm losing 10, I'm losing 20, I'm losing 30,000, 40,000, and then, I got to sell this before I lose it. See, when it comes to the 401k or mutual funds, you're going for the long run. You're going for retirement time. So you shouldn't, if you see that sucker go down, you got to just ride it out. And that's where we talk about how aggressive and how much time you have to make up. So if it goes down to almost zero, which is not going to happen.
Right.
But if it goes down to almost zero, you have 30 years to make up for it. So that's why you shouldn't look at it that frequently.
And I'm glad you brought that up, because that's one of the things. So when I'm checking my stuff, I do see it go down, and I'll be honest with you, sometimes I'm happy when it goes down.
Why? Because you want to buy more, or what?
Because what happens is the stock market's on clearance when it starts crashing, right? Mm-hmm. Everything's going for cheap now. So now I'm able to afford more stocks.
But that's a stock versus your 401k.
Right.
See, those are two different things. I don't think you should confuse them. You know, your stock market, yeah, you should monitor those a little differently than your 401k. Your 401k, that's for retirement.
Right.
And that's when you're supposed to look at, I say at least quarterly, maybe every 6 months.
I would say quarterly.
And take a look how it's doing, and maybe make some adjustments.
Right.
I usually look at it probably twice a year, maybe once a year. It's depending on my mood.
Right.
I kind of set it, kind of leave it alone, because I'm waiting for that when I retire.
Right.
So, and it's been doing good over the years, so I'm not worried about it.
So
now the stock market, I do look at that a lot closer and make adjustments based on what the stock market is doing.
And we're talking about stock market, you're talking about like index stocks, right?
For example, you buy an individual, let's say Ford, Tesla, GM, or whatever the stock you purchase, then those are the ones you look at a little bit more closely.
So even for me, I would recommend checking the 401k on a quarterly basis.
Why?
Here's why. The company that's managing your money, at least the one that I use, they're putting out a flyer, documentation, or PDF file saying like, hey, this is how they're performing. So based on that, that's how I make my changes, my adjustments.
But then, do you think by making too many changes throughout the year, that could hurt you though?
It could hurt you. But I've also seen it where it's helped me.
Where you take it back. Well, because you're working in the aggressive side.
Right.
So I see your point, because if you're in aggressive side, yeah, you want to continue being aggressive and make that movement. Right. So I understand, and I probably agree with you on that then, because if you're
Thank you. Not many people agree with me, but all right.
But if your goal is to maximize your rate of return and you have the age to be aggressive, then yeah, you're going to look at it a lot, probably quarterly.
There's going to come
in my situation where I'm getting closer to retirement, I don't want to make too much changes, too much. I want to keep it to where, okay, it's been doing good. You know, if I look at it, I'm going to probably look at it to lower the
risk, right?
The risk. That's where it starts changing between you and I.
Right. And that's what I was going to say, and you brought that up. At some point, I'm going to have to pump the brakes on that and go more conservative.
But by that time, you should have a lot of money in there.
I hope so.
Yeah, no, you will.
Yeah,
definitely. And if you're putting just the minimum into your 401k, in 20 years, probably will be worth about $1 million.
Right. I got 16 more years to go.
Yeah.
And so speaking of that too, when you're talking about the stock market, I remember, when was it, last year? I think it was last year. The market was taking, I think it was last year, February through about April, May of last year, it was taking a good shit, the stock market, right? I know somebody who had about $100,000 in their 401k. A family member told him, hey, take your money out. Take your money out. It's going to, and I'm like, I didn't say anything. I'm not involved, but I'm like, please don't take out your fucking money. Please don't take out your money. Leave it. There's going to be a correction and you're going to see it shoot up again. I never told that person anything. I'm not in that position to tell them anything. They left their money there. I was so happy that they left their fucking money there. I was like, dude, que bueno. It fucking shot up again.
Yeah.
It corrected itself, I think, May of last year or June of last year, I was saying. Or it might have been the year before, but whatever. It took a shit and then it came back up and it bounced up good. Had she moved it?
Never know.
Might have been worse.
Yeah.
Could have been worse.
It varies. Right. For me, my preferred method of investing is real estate.
Right.
If I have a choice between stock market and real, I do both, but I focus more on real estate. That's been more profitable for me.
See.
And it's tangible. It does go down, but as long as you're holding the property, it's not gonna.
Right.
You're not gonna see it compared to the stock market. You see the money go down, and you say like, "Oh, I just lost." A lot of money.
And some people get scared when you're talking about people panicking when the stock market's take.
It's not very comfortable.
I get excited. I'm like, yes.
Well,
we're going for a ride, homie.
If I'm in the position where I want to buy stock, yeah, of course. I want it to crash.
Of course.
Because that's when you make
It's on clearance. Who doesn't like stuff on clearance?
Same thing. When people are losing foreclosures, hey, it's time to buy real estate.
Right.
It's the same thing. You buy low, you sell high.
Right.
But the problem is most people, when they see the fluctuation, they panic. And they invest, and they buy and sell stock and real estate on their feelings, not really what it's supposed to be.
I remember when I was younger, I was watching the news. I used to be into the news when I was a kid. Fox 11 News was always my thing.
You're weird, dude.
I know. I don't know what the hell. Since I was a kid.
We were trying to see your homies. Like, say, hey, my homie's in jail today.
Well, you remember in the 90s, they had all the party crews, and you would see some of the party crew specials, and I'm like, oh, shit.
There's my homie over there.
There's my homie right there, Rabbit. Yes, they talked about, I remember this, I maintain this in my head. They were saying that unstable investors are some of the best investors.
What do you mean unstable investors?
Like mentally unstable ones, the ones that are kind of like frantic about the way the stock market's doing, because they start making a lot of movements. But this was back in, I'm talking about like early 90s, so it might be different.
You can't, I don't think you should be investing with your feelings.
Right.
You should be making decisions based on like what you're doing, knowledgeable stuff.
Right.
Because if you start buying on emotions, you're most likely gonna lose every time.
You're gonna crash all your market. Yeah.
You're gonna sell when you're not supposed to sell, and you're gonna buy when
you're not supposed to
buy.
Oh, I kind of like this company. It's exciting. I heard him on the news. Nothing but hype, and then forget it.
Yeah, you can't follow hypes. You gotta follow and stick to your guts.
Right.
Go with your gut feeling.
I agree. So I'd recommend, for me, quarters, every quarter, maybe every 3 or 4 months, checking it. Y luego checking to see which is performing very well. And if it's not performing that well, maybe you want to even just to check it out. Give it a little risk, throw a little bit of money in there, a ver cómo it might be in the future.
But it depends on their age.
Right.
Their age group. If you're in the young age group, I agree. Check it regularly and be aggressive.
Right.
But as you get older,
stop
putting the brakes little by little. And then you'll be well. You'll do very well. I'm pretty sure that by the time you get to my age, and you'll be very well off.
Well, I got like 5 more years. I have to catch up to you.
Oh, no.
All right, Danny. Any other thoughts you were talking about?
No, I think we covered the life insurance. We covered the where to invest our money.
Right.
Next week we'll see where we go.
Cool. Sounds good.
If you want to hear more stories like this, please click the like button and subscribe.
Find us on Spotify and Apple Podcasts.